Welcome back to the Malaysia Money Matters show, everyone. It's the 6th of August, 2025. Today, we're really diving deep into Malaysia's economic landscape. It's quite a picture, high-tech ambitions, some traditional industry challenges, and how global trade is shaping things locally. Our mission, as always, is to cut through the noise, give you those clear insights so you feel genuinely informed.
Yeah, it's a really interesting mix today. You can see the opportunities, but definitely some significant challenges in there too.
Absolutely. Okay, let's jump right in. Some quite compelling news from Malaysian companies, starting with, well, a real local success story. TNG Digital, the touch and go e-wallet operator, they've officially hit unicorn status.
Valued at over $1 billion US now. It's big.
Huge. And they serve around 23 million verified users. Plus, they actually turned profitable early this year.
And that profitability point is key, I think. It's not just about the valuation or user numbers. It signals that maybe the Malaysian digital market is maturing. Sustainable models are possible.
Right. A good sign for other local tech ventures, then.
Definitely. Shows it's possible to look beyond just growth at all costs.
Okay, so from digital highs, let's pivot to a more traditional sector facing some difficulties. Hartalega Holdings, the glove maker, they reported a pretty steep drop, 60% in net profit for the first quarter.
Yeah, driven by lower selling prices, less volume, and, that intense competition, especially from the region.
But there was more to it, wasn't there?
That's right. What's really interesting, or maybe concerning for them, is they were also hit with over RM 100 million in extra tax assessments from the Inland Revenue Board for previous years.
Wow, so they're battling a global supply glut and this significant domestic tax issue at the same time.
Exactly. It really makes you ask, how does a major player navigate that as a kind of double whammy?
A tough spot. Makes you wonder about precedent for other industries facing global shifts, too.
It's that constant tension, isn't it? Global market forces versus domestic pressures and regulations.
Okay, let's talk about investment now. It's not just startups. The big players are spending, too. Maybank. They've just signed a huge 5-year deal with Microsoft. RM 1 billion.
1 billion ringgit. That's a massive commitment.
Aimed at accelerating their digital transformation cloud, AI, better security, and it affects, 44,000 employees?
hmm This isn't just routine IT spending. 1 billion ringgit on AI and cloud suggests they're aiming to really lead, not just follow.
Could really change customer expectations across the board for digital banking, right?
Potentially, yeah. It could push smaller banks to adapt much faster.
Okay, switching gears slightly, utilities. The cabinet has gazetted a nationwide water tariff increase starting this month.
And that's already boosted share prices for companies like Randhill Utilities and PBA Holdings.
So for people listening, what does this actually mean? Obviously, higher bills.
It does mean higher cost of living, no doubt. But you have to consider the other side. Think about the huge water demand from new industries like data centers, especially down in Johor. Consumption could quadruple there.
Right, so the hike, while painful maybe, is needed for upgrading infrastructure.
Essentially, yes. It's funding crucial upgrades to meet that future demand. A necessary step, even if it hits the wallet now.
Okay, let's broaden the view now. International and political news that ripples back here. Asian stock markets saw a surge recently. South Korea, Vietnam leading the way. KLCI also up slightly, about 0.3%.
And a big driver for that seems to be growing expectations that the U.S. Federal Reserve will cut interest rates. The odds for a September cut were like 94% recently.
So global optimism means potentially cheaper borrowing, more investor confidence.
That's the general idea. It could make capital flow more easily, benefiting markets like ours too.
Now trade, always complex. U.S. President Trump has been talking higher tariffs again.
Yeah, threatening India over Russian oil, for instance.
But here's where it gets really interesting for us. Malaysia actually secured a reduced U.S. import tariff rate.
Down to 19% from a threatened 25%? That's quite a negotiation.
But there was a quid pro quo, right?
Yes. In exchange, Malaysia agreed to spend up to U.S. $150 billion over 5 years on U.S. equipment specifically for semiconductors, aerospace, and data centers.
So connecting the dots, this is strategic maneuvering.
Absolutely. It looks like the government playing, strategic chess in these global trade tensions, balancing protecting our current exports with investing heavily in future high-tech growth sectors.
Okay, another trade issue. Mexico. They've banned steel imports from Malaysia, Vietnam, and Indonesia.
Citing alleged transshipment of Chinese steel, which our Malaysian companies like Baru Stainless and Micron strongly deny.
So that's a direct hit to our steel exporters.
It is. And it shows how complex trade relations can be, Even within agreements like the CPTPP, things can change fast.
Shifting to regulation here at home, Bank Negara Malaysia, they've put out a discussion paper on regulating artificial intelligence in the financial sector, seeking feedback.
And they're planning more papers soon on open finance and asset tokenization by year-end.
Open finance, like sharing financial data more easily.
Sort of, yeah. To enable new services, potentially. And tokenization is about putting real assets onto the blockchain.
So the central bank is being proactive here, trying to foster innovation.
Exactly. But also ensuring stability and protecting consumers. It's about setting those guardrails early for fintech's evolution.
A crucial step for the future financial system.
Definitely.
Finally, let's touch on the government's finances. Prime Minister Anwar Ibrahim gave an update. Malaysia's statutory debt was at 62.7% of GDP at the end of June, still within the legal limit.
Right. And he emphasized that the total debt increase, now RM 1.247 trillion, is mainly for development spending, not operating costs. Plus, the fiscal deficit has been narrowing for 3 straight years.
Good context. And related to government spending subsidies, the Finance Ministry is expected to release plans for targeted RN95 petrol subsidies by end September.
Yeah, the idea is eligible Malaysians could get it at RM 1.99 per liter, verified using their MyCAD.
So that provides transparency on the nation's finances, signals reforms.
And for many people, that petrol subsidy plan will directly impact their daily budget. It's all part of that balancing act, fiscal responsibility versus cost of living pressures.
Well, from those corporate stories, industry challenges, the whole global trade dance and domestic policy, it really shows how interconnected everything is, doesn't it?
Absolutely. All these things we discussed, AI rules, trade deals shifting, subsidy changes, they're constantly reshaping the economic landscape. And they influence our daily lives, sometimes in quite profound ways. It really makes you think, doesn't it? How can you use this information to make better financial decisions in this, well, constantly changing world?
That's a great thought to end on. For more insights like these and to keep up with all these crucial developments, please do subscribe to the Malaysia Money Matters podcast. Thanks for tuning in.
Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.